Hey guys, thank you for checking out Legacy Creators. Subscribe to my YouTube channel, like my videos so I can keep giving you guys more and more information on how life insurance could be a tool for you and your family. So check it out. Today's video is about how to choose the right policy for you and your family. Very common question. Everybody wants to know, should I do term? Should I do whole life, universal life? So some of the things that I want you guys to think about when you're trying to figure out if a certain policy is good for you and your family are these 4 things. 1 is going to be, how much coverage do I need? 2, how long do I need the coverage? 3, do I want to build a cash asset, retirement option? And 4, do I actually qualify for the insurance through regular underwriting? So once I know the answer to these 4 things, I will be able to choose if either one policy works for me and my family or if I may need a combination. So what do I mean by this? Let's dig deeper. So to answer the question about how much coverage do I need? Well, typically we want to do about 10 times our income. But this all depends. If I'm an individual that has children, I'm married, I'm going to want to do this 10 times my income. I may even want to go closer to 20 times depending on what my expenses are. A good way for you to figure this out, if I make $100,000, I'm going to do $1 million in coverage. Now, depending on where my budget lies, is going to determine what type of coverage I'm going to get. Now, before we dig deep into that, I want to go back to the fact of how much coverage. Now, when I'm figuring out how much coverage, so 10 times is the initial amount we're looking at, but now let's look a little deeper and calculate some of our expenses. If we're a family that spends a lot of money on, let's say, activities, let's say we have a mortgage, let's say we go out to eat, let's say we just have a lot of debt, we're going to calculate these things and make sure that the coverage we're getting is going to be sufficient. So let's do an example. Let's say it's somebody who has a mortgage for $500,000. Let's say you're in debt collectively for $250,000. Now, the reason why I say collectively, if your husband and wife, right, and one person passes away and you guys are sharing the debt, so that means you guys are co-borrowers, then the debt will fall on the other person. So any debt that you guys are sharing, you want to make sure is covered in the insurance. Also, dependents, your children, you may be taking care of a family member. If you are, whatever it costs you to take care of these children, think about food, clothes, housing, extracurricular activities. You want to think about all of these things. This is how we come up with a round number. Now, if you're also somebody who's a real estate investor and you have multiple properties and you have debt on the property and you want to leave these properties debt free, here is also a space where you're going to say, hey, let me tally up how much debt I have and make sure that the insurance covers that. So that's our number 1. That's our figuring out how much coverage. So once we figured out how much coverage that we have, we need to know what our budget is. And depending on our budget will determine which type of insurance we're going to go for. So there are 3 types of insurances, and 1 is term, whole life, and universal life. Okay, those are the 3 types. They all cost a different amount of money. So term is going to be your most affordable, universal life is going to be in between, and whole life will be your most expensive. So depending on what your budget is, we're going to have to then figure out how much of that insurance may be in permanent coverage and how much of that may be in temporary coverage. Permanent coverage is going to be whole life and universal life, and your temporary coverage is going to be your term. Why am I calling it temporary? Because term is a temporary product. You can check that out in my video about term, just as you can check out whole life and universal life in my other videos that I have that I go dig deep into there. So let's get back to our list. Now we know how much coverage that we want. All right. Number 2, after we figure out the coverage, we want to know how long does this coverage need to last? Do we need it for a period of time, or is it something we want to have forever? Now, if you're somebody who wants to make sure that your family is always insured, you definitely need insurance that's going to be forever. But you may have more pressing concerns in your earlier years because let's say your children are 10. If your children are 10 years old, then for the next 20 to 30 years, you have some more pressing concerns that if you passed away early, these children would need more money because they're minors and they're very young and they're trying to figure it out. And as we know, even when our kids are 20 or 25, they still may need some help. So in that case, you're thinking, hey, I need more coverage in the years while my kids are younger. So in that case, I'm going to say, hey, well, if my child is 10 years old and let's say I have another child that's 8, maybe I'm going to do something called a 20-year or 30-year term so I can have a lot of coverage for that period of time for if anything was to happen to me in that time frame unexpectedly, they will be well taken care of for a more affordable price than it may cost me to have a permanent coverage. All right. So this is the reason why you have to understand what it is that you are covering and what time frame is most pressing. Does not mean you don't need permanent coverage for the rest of your life. But what it does mean is if we have a certain budget, we're going to make sure the budget covers the amount we need for the pressing time, and the difference of the budget we can use towards the permanent coverage that we will have for the rest of our lives. Third, we're going to look at, do I want to build cash value as an asset? And do I want to use it as possibly retirement or investment? If these are some of my goals for my insurance, now we're going to have to lean into that permanent coverage, right? Because the permanent coverage is the coverage that builds cash value. Term does not build cash value. Only the permanent policies do. Whole life and universal life. And I also want you to know there are many variations of permanent policies. So you also need to make sure it is a cash value building policy and not like a straight flat benefit that's a permanent policy, like a guaranteed universal life. So these are the questions you would ask the agent when you're trying to figure out if it's a permanent policy that builds cash value. So if your goal is to build cash value, again, we're going to look at whole life or universal life, many variations of it that you can check out in my video about whole life. I will describe all of the different variations of it so you have a better understanding. All right, so now that we know, yes, I do want some tax-free income in retirement. Yes, I do want to build a cash asset. We know we're looking at some permanent coverage. Doesn't mean that because we're looking at this permanent coverage that we can't have a temporary coverage too. You can have both. All right. Next, we're going to have to figure out question 4. Do I qualify for the insurance with regular underwriting? Well, what's the regular underwriting? Regular underwriting means that the insurance company is either going to do a medical, they're going to possibly do a telephone interview, they may do a questionnaire that they may send you. Either way, going through the underwriting process, meaning you're healthy enough to get qualified. Now, the health part is only part of the underwriting. Lifestyle is the other part. So they will be checking to see that your driver's license is not suspended, is not revoked, doesn't have DUIs or DWIs. They will be checking lifestyle if you have a criminal history. Now, listen, I am not telling you that because you have a DUI, because you have a criminal history, you cannot get insurance. What I am saying is that once they look into those things, they will decide whether or not you are a candidate to be able to get the insurance under regular underwriting. Every circumstance is different, and depending on your situation individually, they will make a decision on whether or not you qualify for insurance. So don't just think, hey, I got a criminal history, I can't get insurance. No, if it's been some years or the charge is not that bad, it's at their discretion. All right. So again, guys, the 4 things you're looking at when you're trying to figure out what the correct insurance is that you want to get for you and your family is you're going to, 1, figure out how much coverage you need. 2, you're going to figure out how long you need the coverage. 3, you want to know if you're trying to use it to build a cash asset, retirement, investment. And 4, you want to know if you qualify. After you know the answers to all of those, we'll be able to figure out if it's going to be term, whole life, universal life, or a combination of the different policies. Make sure to hit the like button, share. I appreciate you. Check out my other videos. Have a good day.